China is taking aim at Canadian canola farmers.
This morning, China announcing a preliminary anti-dumping duty on Canadian canola imports.
It's a very big deal for Canadian farmers that grow canola, so the value per ton will likely go down and sag for periods of time. And then the other is will farmers be able to sell all that they produced?
When China imposed an astounding 75.8% tariff on Canadian canola, a commodity valued at billions to the country's economy, Canada was shocked. What would appear to be the demise of one of Canada's most lucrative sectors surprisingly became a tale of resiliency and innovation. Overnight, roughly $5 billion in yearly exports disappeared, leaving farmers with severe losses and processors in a panic. For many onlookers, it appeared to be the last straw as markets prepared for a collapse. However, the alleged catastrophe swiftly turned into a watershed. China's pressure tactics started to backfire, but instead of giving up, Canada used the setback as motivation to rebuild stronger. It was a retaliatory tariff. Beijing responded by attacking Canadian canola, which has traditionally been a representation of Canada's agricultural might, after Ottawa joined the U.S. and Europe in placing high tariffs on Chinese electric cars. The move appeared to be the ideal weapon on paper. It would damage a crucial export and make Canada give in. However, China misjudged Canadian farmers and the protections that were already in place. From wheat to cattle, Canada's farm industry had previously survived trade conflicts because of safety nets and a history of swift adaptation. The nation was not as vulnerable as Beijing had thought. Ottawa made it plain that the government would not allow farmers to fail by announcing emergency help within days, including price insurance, reserve funds, and direct financial aid. However, the private sector was responsible for the actual change. Industry associations, traders, and producers didn't spare any time in looking for alternatives. Almost instantly, new markets emerged. South Korea, Japan, the EU, and several regions of Southeast Asia started to increase their purchasing. Exports to these areas increased by 20 to 30% in a quarter. What China hoped would be a crushing blow instead gave Canada a chance to diversify and lessen its reliance on a single buyer. Even more amazing was what followed. Canada strengthened and expanded its trade relationships rather than merely replacing lost sales. Canada's reputation for producing high-quality, GMO-free canola was highly valued by European buyers in particular. At the same time, Canadian canola became more attractive than ever because of the growing demand in Asia for healthier oils and greener biofuels. By swiftly changing course, Canada demonstrated to the world that it could prosper without Beijing, and that China was not its only choice. Canada's trading position is now more resilient than it was before losing a major buyer, which compelled it to acquire numerous others. China's planned punishment actually strengthened Canada's canola industry, making it less dependent and more competitive and diverse than before. However, the change didn't end with new markets. Canada started to rethink the potential of canola. The crop was mostly sold as raw seed for decades, making farmers susceptible to fluctuations in prices and tariffs due to its poor profit margin. On the other hand, the trade shock hastened the transition to value-added processing. Canada has progressively converted canola into refined vegetable oils, plant-based proteins, and bio-based ingredients for clean energy instead of shipping bulk seed. We're not just exporting seeds anymore. One business representative clarified, we are exporting energy and food security solutions. Canada gained a strategic advantage with this advance up the value chain. While energy corporations looked to canola as a feedstock for renewable fuels, international food companies saw Canadian oils to cater to health-conscious consumers. What appeared to be a crisis suddenly opened up billion-dollar new markets. More significantly, this diversification offered Canada power because it made it much more difficult for trading partners to sever links without simultaneously denying them access to vital items in the areas of clean energy, food, and health. What began as a last-ditch effort evolved into a strategy for sustained competitiveness. Additionally, China started to experience the effect of its own tariff, while Canada was reviving its canola sector. Instead, what was supposed to be a display of force caused unintended consequences that caused Beijing much more harm than it had expected. Beijing ended up raising prices for its own food processors and biofuel producers by severing Canada's cheap canola. At a time when the domestic economy was already struggling with weaker growth and strained foreign ties, Chinese enterprises were stung by price increases for cooking oils, livestock feed, and renewable energy projects. The tariff actually backfired. China found it far more difficult to replace Canadian canola. Canada's magnitude, quality, and dependability were unmatched by many other countries. Canadian farmers, however, were prospering and frequently selling at larger margins to a variety of new markets. Value-added processing made Canadian goods more difficult to replace, and diversified exports decreased susceptibility. Instead of crippling Canada, it improved its standing in international trade. Ironically, China ultimately demonstrated Canada's point that, although tariffs might provide short-term leverage, they frequently expose structural flaws over time. Canada showed that flexibility, creativity, and strategic alliances are considerably more powerful than any trade weapon as Beijing struggled with growing expenses. This conflict is today seen by analysts as a classic case of economic miscalculation, when a measure intended to subjugate Canada instead aided in the development of a more robust, future-ready sector. The lesson is not limited to canola. China believed that a 75.8% tax would be devastating, but Canada used it as a chance to open up new markets, develop value-added sectors, and demonstrate its flexibility. A temporary crisis turned into a long-term benefit. In international trade, strategy and resiliency are more important factors than sheer strength. Canada not only made it through, but came out stronger, demonstrating that real strength comes from turning adversity into opportunity. Canada was the one that shocked the globe this time, not China. Thank you for watching the video, and don't forget to like and subscribe.